a little bit of a correction come through, and you're seeing that kind of cut play out in the Asian markets as well.
They should be talking about it, not that they're doing it, but that should be, part of the conversation, given the softness of the data.
Next major resistance zone, based on Fibonacci retracements extensions, is between the 20,850 to about 21,100 levels.
With a strong opening, up close to about 80 points.
We have raised our allocations from being neutral heading into the year to overweight.
We make all our efforts to see that we sustain our growth momentum.
The Shriram Properties is also looking to monetize its land bank and raise close to 300 closer.
We are very booked out in certain locations.
Yesterday was Super Monday, and looks like today could be a terrific Tuesday as well, right? A solid follow-on rally.
IOC was up 58% and BPCL was up 84%.
We'll be able to create 1,500 crores of additional revenues from these three acquisitions.
And unless the water is drained out, power supply will not be restored.
For now, the Nifty is up around 128 points.
Okay, well, it is turning out to be a terrific Tuesday. The day so far, you're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 News Online studios. Last hour coming up. I'm Prashant. With me, my colleagues Reema and Nigel. Hi, afternoon.
Hi, afternoon. And it's good to see that afternoon, at around 12 noon, between 11 and 12, we had the dip in the markets. The Nifty fell from levels of 20,800, almost down to 20,700. But that was swiftly bought into, and now we're back again above 20,800 in the face of weak global cues.
I think large caps are doing well. And if you look at just to kind of put in to focus what's happening in the broader market, declines outnumber advances. That's interesting. It's with a Nifty which is up 100 plus points. There are about 1,300 stocks which are lower and about 1,000, 1,050 stocks which are higher. So market breadth is skewed on the other side. Mid-cap index is slightly in the red. It did sell off intraday. And you've got the small-cap index is in the red and the mid-cap index has got about 0.25% or so. But finally, as we've been hearing for weeks on end, with mid-caps and small-caps doing so well, perhaps the action now shifts to the mega-caps, the large caps. And I think we are seeing some hint of that. So 20,800. Yesterday's 400-point gain, another 100 points today. So not bad at all. Adani Group stocks, of course, will be one talking point, and we'll put out some data, etc. on it in a bit from now. Stocks are up. I saw one stock, at least in that group, which is up 20%. That is Adani Green. But big stocks, institutionally owned stocks, Adani Ports are up 13-14%. So that is a very strong move, actually even stronger than what we saw yesterday for many of these Adani stocks. Today is day two is turning out to be stronger than day one. Oil and gas and energy was a very strong pocket yesterday, along with PSU banks. The energy index is up another 3% or so. The PSU bank index is up about 1.5%. So in many senses, there is continuation of the strong pockets where we saw the bulk of the gains in trade yesterday. So far so good, holding on above 20,800. Reema.
Well, it's been good for the last few trading sessions, particularly yesterday and today with a kind of follow-on rally. But over the past 6 trading sessions, the Nifty has seen a rally of 1,000 points and the Nifty Bank, that's seen a rally of close to about 3,200 points, all in a span of just about 6 trading days. In the last 2 days, it's the Adani Group stocks and names like Adani Enterprises, Adani Power, they've seen a rally of more than 20%. And large cap banks, the mega caps as we've been calling them, they've seen an up move of about 7% for ICICI Bank. State Bank of India is up close to about 6.5%. HDFC Bank is in the green, but it's come off a tad bit from the day's high. Pull up that intraday chart. On the losing side, it's IT, which is subdued. The Nifty IT index is down nearly 1%. HUL, Bharti too have slipped quite a bit as the day has progressed.
Well, indeed, Reem. I think, the mid-cap index, if you look at the advanced decline ratio, you'll see both of them, in fact, they've crossed each other. Now you have more number of stocks that are declining in comparison to the number of advances, though the mid-cap index is looking up. I think the crisscross lines give you a better picture. And now, the big focal point, I think, for the markets is the underperforming sector has been the Nifty Bank. Can it hit 50,000? If that's going to happen, then you're going to have a bazooka rally even on the Nifty, because that's more than 30% of the index that hasn't participated so far. And the Nifty Bank at around 47,000. No one would have thought a couple of weeks ago whether or not we're going to be going even to all-time highs. Well, let's find out, how do you trade this final hour? We have, I think, with us, Mitesh is back with us. Hi, Mitesh. Good afternoon. Another good session, right? If you're hoping that this market is going to pause for breath, it's not happening. Would you be tempted to take some money off the table? Or would you say, trail the stop loss, this market is headed higher, I want to participate?
See, good afternoon, Nigel. So if somebody is a very short-term trader, who traded the event for a long side kind of a trade and the one-to-day kind of a trader, maybe yes, you would want to take profits. But if you're a position trader, I think this looks like a market which is showing good strength on the medium-term chart. So I think, I would want to see if my trading stop losses hold on and the rally kind of, keeps on making higher highs. So the bias is more towards holding on to positions. In fact, early in the morning also I mentioned, I think declines on an intraday basis should be used to buy into the markets. So anything closer to about 20,600, 20,500 would be an absolute buying zone for me. Similarly, on the bank nifty, I think closer to 46,600, 46,650 zone is the buying zone. So, and just below that, I think, about 50 points below that, you can place your trading stop loss. So I think that's the way we'll approach it. I think there's a fair chance of us making higher highs before this rally kind of turns negative. So stay long, stay positive.
Stay long, stay positive. That's the advice. What about stocks?
Yeah, and on the stock side, I have a buy on Bajaj Finance. I think that's come close to support levels. So buy here with the stop at 72.80 for targets of 7,500. And the other one which I like is CSB, Catholic Syrian Bank, which I would recommend buying with a stop at 396 for targets of 424.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on a couple of names then. Mahindra & Mahindra Financial Services, well, that is down close to around 3% in trade. This after the company released its business update for the month of November. Abhishek's with us to run us through the fine print out there. Abhishek?
Well, for the month of November, M&M Finance has given their business momentum. Disbursements are at 5,300 crore, up about 16% YOY. The year-to-date disbursements are about 36,000 crore, which is up 16% YOY. Business assets are up 26% YOY and 17% year-to-date. That is from March to November. Collection efficiency has dipped on a YOY basis to about 94% when compared to 96% in the same month last year, and about 94% in the previous month. Stage 3 and Stage 2, which is gross NPA ratio, and Stage 2 is loans due above 60 days but below 90 days, that have remained range bound when compared to September 23 numbers. Liquidity in the balance sheet is over 2.5 months. Back to you.
Okay, well, Abhishek, thanks very much. That's M&M Finance for you. Looking at Honasa, which is down another 4.5% today. So that continues to, feel some pain. High was 485 or so. We are at about 367 in short order on Honasa in the last 6 sessions. Deepak Shenoy of Capital Mind is with us, our first guest in the program. Deepak, good to have you with us here. Thank you for your time. Just a quick sort of, how are you thinking about, or if you've thought about it, if you've not, how would you think about the Adani Group names from here? One of the things which has been talked about is no real institutional participation except in Adani Ports. Could that change from here on, in your opinion?
No, I think the only real, institutional player interest might be in Adani Enterprises, but not so much in mostly other players. They're relatively small, and some of them have still to prove themselves on a fundamental perspective. So there probably isn't quite as much. There is some good news coming from the group. I think there's been some regulatory updates which are kind of favorable. There's some of the group investigations, which I think some of the US investigators also said there's not anything major that they found detrimental to them. In the US, you don't have the kind of rules that you have in India. So the concepts of, say, institutional ownership versus domestic retail. In India, you have to have a minimum 75%. In the US, there's no such thing. So there is no illegality in the eyes of other regulators if, for instance, you're more than 75% at some point. So some of the allegations that perhaps Hindenburg had put are not relevant in, say, the US context. But in general, I would say, the institutional interest is primarily based on, say, Adani Ports, because it has such a good, relatively good business in comparison with the rest. Also, Adani Enterprises also, has been part of the Nifty, so there is that for it. But many of the smaller players, I'd say, until they prove that their balance sheets can actually grow at the same size that their stock prices have grown, in the past and now recently as well. I think then there'll be more institutional interest. Otherwise, we'll probably see only retail and maybe some domestic interest here.
Pull up LIC's 1 or 2 week chart. LIC is a bit subdued today, but over the past 5 or 6 trading sessions, we've seen LIC's share price move up from levels of 600 and now to levels above 700. That's, a 2 week chart will show you the movement over the last 1 week. There you have it. 1 month gain is about 17%. Deepak, I know you like LIC, isn't that right?
It is.
Okay. So, yesterday there was this Kotak note. On Kotak Institutional Note on LIC, where they're talking about how LIC's launched a non-par product called LIC Jeevan Utsav. Tell us a little bit more about this product, and as Kotak asks, will Utsav change the tide for LIC? Where do you stand on that?
Yeah, Rima, I have a very conflicted view, because there's one view that you would give as a shareholder, which is that people should buy this product because it's a non-par product. So all the profits on the non-par product flow to the shareholders. And as an insurance entity, you can convert, let us say, a 5 or 6% IRR to the investor to some nice sounding statements such as, I will give you back 10% of your sum assured every year for the next 30 or 40 years till you die. A relatively simple proposition that requires only 5 to 6% IRRs, which is easily achievable in India, even using government securities. And yet turn a fairly good profit for the insurance company in the long run. To the investor who can calculate it, will probably look at it and say, why would I invest in a product that gives me only 10% or 6% IRR or so? But there are very few investors who actually think like that. So the product can be marketed in and it, with LIC's reach, they tend to get to a lot of people, many of whom are not, the most financially savvy. So I think that way the product could make a significant dent. It's also increasing of their non-par share from what it is currently 10%. They want to bring it up to 25%, which is, a very profitable exercise for a company like LIC, where I think the annual profits will be this year should be around 40 to 45,000 crores. Next year should be 50 to 55,000 crores, simply because a lot of one-timers go away. So adding more non-par will just increase the profitability for shareholders. So as a shareholder, I think this is a very good product. I think investors, people who are in the looking for this product for phenomenal returns may be a little disappointed, but post-tax 6% may not be such a bad thing for a lot of people who don't have great avenues otherwise.
Post-tax 6%, and this is assured return, right? For a long period of time. Got that. The appropriate disclosure will also come up. Deepak is, I think, invested in LIC. Deepak, wanted to get your thoughts in on IT, and we've spoken about it in the past, but here I want to ask about the potential risk from insourcing. There are a lot of companies, which includes your Citi, Airbus, so both BFS and non-BFS are setting up their GCCs, captive centers. And the latest news, or the latest company which is getting impacted by that, is HCL Tech, where State Street has said that they want to acquire HCL Tech's stake in their JV, and go do it by themselves, do it by the captive center. So there is going to be that hit to HCL Tech. So your thoughts on this particular development and this potential risk from rising insourcing or the rise of GCCs on IT companies?
So I mean, to be fair, this is, I think, the way a lot of companies started. My first job offer in 1996 was to join what was called at that time Tata IBM, and which has now become IBM Global Services in India. It was a joint venture model that eventually IBM took over. It was a planned takeover in the longer term. So the Tata, ownership kind of was bought out by the IBM global arm. A lot of companies do that. They kind of partner with Indian companies with the express realization that over time, when we get to scale, we will take over our business and we might set up our own arms in India. I think this has been happening pretty much every decade in the last 3 or 4. We are seeing the increased. So once you get to a certain size, you want to say, I want to control costs, and then you kind of set up your own. And then there's a lot of other things that go with it, the regulatory concepts that require you to have insourced your own employees rather than outsourced in certain cases. and so on. I don't think this is a necessarily bad development. I think it's part of the game that even HCL and all of the other players would have actually seen this in many of their projects. At this point, I suppose a large project going would be a temporary setback to a company like HCL Tech, but I think they're big enough and the balance sheet is strong enough for them to do the exact same thing on the other side, which they didn't used to, which is to go to large companies and tell them, we will take over your IT operations, we will pay you a certain amount of money, and then you will pay us on a per transaction or a per ticket basis for support or for IT for the next 20, 25 or 30 years. And we will be your support division. The expansion of IT has allowed the other side of this game to also happen. And I think, they will explore more of those kind of deals. So such things are commonplace in the IT industry. And I think, only a temporary setback, if any, we will see bigger deals come from there. Not an investor in HCL Tech, but yes, I have investments in the IT sector.
Okay, all right. Deepak, Abhishek had just told us about Mahindra & Mahindra Financial Services that came out with their update, and the street doesn't like it too much because the stock is down closer on 3%. Any view out here?
So I think one of the things that people have been looking for is whether disbursements have slowed or collections have slowed after the RBI circular has come in, because RBI's fear has been, have you been lending too much to personal loans that are that are unsecured. So I think maybe that, I haven't seen the full, it's just come in, so I don't know what the current impact is. But if there is a fear that some of their portfolio may have been impacted, that may be one thing. But their portfolio has a lot of secured loans and agri loans as well, which is not affected by the circular. So they may be that much that kind of changes. It's also their cost of funds. They haven't mentioned that whether there's an increase in the cost of funds yet, at least in their update. So we'll have to see whether that has also been disclosed or talked about in any of their investor updates. I haven't seen this right now, but that's the thing that I would look for in any NBFC today is collection efficiencies falling, growth in disbursements slowing down, and any change in cost of funds.
Okay, all right, got that. Deepak, request you to stay with us. Just before we slip into that break, we have ABFRL. The intraday chart of that stock should come up for you. At around 2 p.m., the stock was trading in the red. It's moved into the green, so that's one notable mover. And a couple of these capital goods / industrial stocks, whether you're looking at ABB, whether you're looking at Siemens, both of them are seeing a bit of a spike up in the last few minutes. They're not up too much, but bulk of their move has come in the last few minutes. Just thought we'll highlight some of these stocks for you. And Bandhan Bank, I think earlier today, Vivek had highlighted it on the momentumizer segment. And that one as well has bucked the trend. Suddenly, it's participating. Remember, some of these stocks have been big underperformers, but as we speak, they've moved to the high point of the day. Slip into a short break. When you come back, we'll discuss more on the markets. We'll also have Vinay Pahagria of PGIM India Mutual Fund that'll be joining in.
Welcome back. Patanjali is moving higher in trade. The stock is up close to about 4% today as an analyst meet scheduled at 4:30 at the Geo Convention Center in Mumbai. So analysts would be attending that, and the stock has moved up close to about 4% ahead of that, 4.5% now, in fact, as we speak. DCB Bank is another big mover. The stock is up close to about 3 to 4%. This is after the company's promoter, Aga Khan Fund, has announced its intention to invest $10 million into the bank. Abhishek joins in with the details. Abhishek.
Well, as you mentioned, Aga Khan has put in interest to invest about $10 million into DCB Bank. Now, this is obviously subject to approval from RBI as well. So, what this fund infusion at yesterday's closing price would mean is that the bank's Tier 1 ratio can improve to 14.56% from 14.28% that is there right now. The Aga Khan's stake can increase to about 16.01% versus 14.03% that they have right now. So therefore, they need an RBI approval with respect to taking their stake beyond 15%. So promoter entity, of the promoter group as such, the stake will increase to 16.78% versus 14.81% that is there right now. Equity dilution as per yesterday's closing price could be in the range of 2.3% to 2.4%. Back to you.
Okay, Abhishek, thanks very much for that. Well, let's now focus on another buzzing sector. Oil marketing stocks have been absolutely on fire. The rally actually, in many senses, November was a very big month for all these oil marketing companies, and it's taken all these stocks to pretty much 52-week highs. There were upgrades for a lot of these companies after second quarter earnings as well. Sonal is standing by, and she's going to tell us what the key trends are and why the street is so excited about this space. Sonal.
Well, it has been all about the oil marketing companies HPCL, IOCL and BPCL in last 1 month and the year as well. It is a stellar move for the stocks of all of them at 52-week high. That is year to date. HPCL is up 65%, IOCL is up 42%. We have BPCL which is higher as well. For HPCL and BPCL in particular, it is the best year since 2014. So let's take a look at this table. In 2014, the HPCL stock was up 131%, IOC was up 58%, BPCL was up 84%. And after that, 2023 is the year which is the best for stock returns for these companies. But after this run-up, our valuations stretched. Not at all. In fact, the valuations of all three OMCs are still lower than the 10-year average by around 10 to 15%. The sector is seeing tailwinds in terms of low crude oil prices and no intervention by the government in fuel pricing ahead of state elections. But whether that will remain the case ahead of general elections will be the key to track for these stocks. Now, let's specifically talk about HPCL because there are a lot of triggers in place. Company has raised its refinery capacity 7 million tons per annum at Vizag. There is 9 million tons per annum of commissioning at Barmer. Mumbai has already seen an expansion by 2 million tons per annum. Company has also commissioned 2 major pipeline projects and 5 million tons regasification and storage terminal at Chhara. Now, it plans to invest 75,000 crore rupees in next 5 years with 20 to 25% in renewables, 20 to 25% in refining and the rest in the marketing segment. Company will also form a wholly owned subsidiary for green business to foray into renewables, EV and hydrogen segments and crude to chemicals. The last one is lubricants demerger. The company announced it a while back but is awaiting certain approvals from the Government of India and is working on either listing it separately or bringing in a strategic partner. This is about HPCL. But Kotak, in a note yesterday, cautioned on the sharp increase in OMC's stock prices. They say that they're surprised by the sharp 25 to 40% up move in OMCs in last 1 month and the recent run-up in OMCs seem excessive and hence they have downgraded the stocks to sell from a reduce.
Thanks a lot from that, Sonal. Deepak, what do you think? The run-up is too furious, too fast, or do you think there's still value left on the table?
There's only value here, honestly. If you look at the stocks, 4 times earnings, 35% ROE right now, fairly profitable operation from both. Refining is okay, but I think the oil marketing business it's doing really well. But this happens every 3-4 years. The prices peaked in 2018. They were 500 something plus for BPCL and I'm sure in the others as well. The problem really is that when crude prices go up, the government is going to force them to not increase prices and therefore take losses on their balance sheet, which is what happened a year or so back. which is why last year the ROEs were just 6%. So if you have something that's so varying in ROEs because the promoter decides to make this company take a loss, then obviously you're not going to give it a whole amount of valuation. So if anything, you should play it as a momentum stock or a momentum set of plays, more short term in nature. That might last maybe a year, maybe 6 to 7 months. But keeping this for the long term, we've burnt our fingers thinking that VPCL was going to get eventually, disinvested and so on. And after 5 long years, the government just pretty much threw their hands and said and gave up. So great business, just not enough value in there for a growth investor or someone who's been through 2 or 3 cycles. I'm just cynical. I'll wait for the price to, cross maybe the previous highs made in 2018 before I would take a call on this, which is only fundamentally that is.
Okay, Deepak, thanks very much. Great speaking with you. Appreciate you joining in. As you said, there's value, but can that all of that value be extracted in a consistent way? That is the problem, and it's something which very difficult to buy if you, as you said, have seen what these stocks have done over say 2 decades, maybe more. Thanks once again for joining us. Vinay Paharia is with us, Chief Investment Officer at PGIM India Mutual Fund. Vinay, good to have you with us here. Thank you very much for your time. Yesterday we got that big number, so domestic mutual funds pouring in money. And that has been true actually not just yesterday. Yesterday, of course, was the largest we've seen a single day in a while. But what are you doing, Vinay? And are you fully invested? There were a lot of mutual fund managers and PMS managers who were kind of sitting on some cash, waiting for dips, etc. I think all of that is now out of the window. What are you doing?
Hi, Prashant. Good afternoon. Thanks for having me on your show. So, Prashant, we do not take any cash calls. So, our objectives are largely to remain invested as much as possible. So we do not take any such cash calls. And yeah, that's how we manage our funds. Having said that, I think overall there has been a lot of valuation gaps which has got opened up across the capitalization curve. And I think I'm sure a lot of investors would have wanted to take advantage of that.
Gaps, Vinay? Can you be specific?
Sure. So I think the large cap segment per se is fairly attractive today. We have not seen a material gap between the underlying fair value growth for large caps as a basket compared to their share prices. Whereas on the small and mid cap side, we have seen significant re-rating, especially from the start of this fiscal year, such that now most of the small and mid caps are trading at significantly higher than their current fair values. And hence, the potential upside has reduced for most of the stocks in that category. And hence, I think that's what I was alluding to.
Vinay, you said that you don't take a cash call. Money is flowing into funds, thick and fast. So the fresh money allocation, where are you putting it in now?
Hi, Rima. We would be incrementally putting in most of the money to work, specifically in large caps and selectively in small and mid caps. Apart from the breakups by capitalization, if we were to look at the markets from a growth and quality perspective, we had actually recently released a note which talks about the wide gap. And the gap is between good quality and high growth companies and weaker quality and weaker growth companies. What we have seen is that in this year, good quality and high growth companies have significantly underperformed the weaker ones. And I think that's where a large portion of opportunities lie, not only in large caps, but also in a lot of small and mid caps. So I think we are very closely looking at the high quality, high growth space in across the board market capitalization range.
Hi, Vinay. Good afternoon. Nigel on this side, and good to see you. And Vinay, I recall your portfolio had a fair bit of IT stocks, both large and mid-cap. And irrespective of what the commentary has been or the results have been, the stocks have done very, very well. How are your positions now on IT? I mean, what is the total weightage you'll have to IT? And post this kind of a run, with some kind of uncertainties going ahead, will you not be adding, or would you look to lighten some positions?
Hi, Nigel. So we have been adding to our exposures to the IT company for the simple reason that the entire space got significantly derated over the last 1 year's time. And as you rightly said, the growth has reduced, but the valuations have reduced at a faster pace. And if we look at on a holistic basis, there are many IT companies which are operating in specialized field like engineering and R&D space, and some of them are in auto research, so on and so forth. They'll present lots of opportunities. So I think on a bottom-up basis, even the IT sector presents material opportunity. We are underweight the sector, but we have reduced our underweight significantly in this sector.
You've reduced your underweight significantly in the IT sector.
Yeah, we have reduced our underweight position, but yes, even now we are underweight the IT sector.
Got it. What are the other tactical calls or the changes that you've made in your portfolio?
So Rima, we are significantly overweight private sector banks, especially the larger private sector banks. We think that's a no-brainer trade at this point of time. Extremely attractive valuations with reasonably high growth and high ROE. And then another space where we are positive is in the healthcare space, specifically on the hospital side. So we own a basket of hospitals across the board, which appear to be growing at a fast pace, and they are also available at reasonable valuations based on our internal assessments.
Okay. Would you want to name names, Vinay? Would you be able to in the hospital space?
So Prashant, we cannot talk about individual names, but I think we are positive across the board. If we look at the entire hospital space, most of the companies in that space are reasonably attractive. Even the large names or the mid-cap names. All of these companies possess a reasonably good growth outlook. They have reasonably high returns on equity, and even now they are available at reasonable valuations according to our assessment. So I think that's how we are positioned.
Yeah, one of the changes which is underway, and it'll be, I think we'll be talking about this for many years, is renewables, right? In many forms. There's autos, there's electric vehicles. On the generation side, there will be changes. Do you own anything which kind of gives you exposure to that? I mean, many believe going individually business-wise is hard. So maybe you look at banks or financial institutions which are funding these projects in a big way. Any thoughts?
Yeah, so Prashant, I think when you look at any trend, as shareholders, we generally benefit if and only if that trend gets captured in positive economic profits. So for example, the financiers might not extract the best returns on equity out of it, but let's say a company which is working on ER&D space might be better benefit out of such trends, or companies which are supplying the ancillary products, or companies which are supplying chemicals to electric vehicles, so on and so forth. So I think what we try to do is look at various themes and companies which can earn higher share of economic profits from those themes, and which can earn a growing pool of economic profits from that theme. So yeah, I think most of the companies could come in from different sectors. Like for example, in materials, there could be in a lot of chemical companies which benefit out of the changes in the EV side, for example, benefiting from adoption of EVs. So I think we look at the entire thing very holistically.
Vinay, we'll leave the conversation here for now. Thank you very much for joining in. We'll slip into a break on that note. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We also get you a few BTST calls from our technical experts.
Okay, welcome back. 160 points. Well, this is turning out to be, day two of. It's not the same. It's not 400 points. It's almost half of it, right? And that's quite something for the second day in a row. So just incredible amount of momentum is what we have. Take a look at the Nifty Bank and what's happening there. New highs yesterday, and today we got another 1/3% gain on the Nifty Bank. The broader market is something that we were mentioning earlier. Market breadth is still slightly negative, about 100 stocks. It's the gap is narrowed. Mid-cap index is down. Small cap index is down. Mid-cap index is just marginally higher. It's moved up a little bit though, 0.5% or so. But 170 now, as we speak, as we approach the last 30-40 minutes of trade, things are getting even better, at least on large caps. What's happening on D Street Chatter is Nimesh is standing by to tell us exactly that. Nimesh, what's the mood like, and will we get one more bazooka of a number later today?
Well, Prashant, looks like you'll see a very large number today as well, both from the FIs as well as the DIs. So, a big move on the markets, and that's largely backed by institutional activity. That's the overall feedback. There was a basket buying since morning, and I understand there's also going to be a market at close basket buying at a leading FI desk. So that probably explains the move in the last half an hour of trade. We've seen big moves in the large cap stocks today. The sectors which are well bid includes the private bank stocks as well as the PSU names. So these two sectors clearly stand out as far as the institutional activity is concerned. So that's playing out in the stocks as well. Not to mention the big move in the Adani Group stocks. For second day running, all the Adani Group stocks are buzzing in trade today. Some of the stocks have hit the 20% upper circuit as well. Even the future stocks of Adani Group are rallying 15, 13, 16% as well. So big move in that space. But from an institutional activity point of view, it's the private bank names as well as the PSUs which are well bid.
In fact, look at the Nifty CPSC index. It started off with modest gains, then it fell, and it fell pretty sharply between 11 and 12, and now it's suddenly come back into life and has got a gain of close to about 1.5%. That's the CPSC index. There you have it. Nimesh, you want to fill us in on the stocks that you picked up, where there is some chatter?
Sure, Rima. So in terms of individual names, the first stock on my list is CESC. For second day running, that's been buzzing on good volumes. I understand some HNI interest seems to be back in that stock as well. And also the street is anticipating some corporate development. So the feedback is maybe the company is getting into renewables again. So that's the space which they're looking at, and hence that stock is excited for the last few days. The second is, there were a lot of block deals in today's trade. So I'll just try to capture all the block deals today. So first one is Sapphire Foods, 4.5% equity got changed hands. There was a large block there. Swan Energy saw a large block in the pre-open trade today, and after that the stock rallied 10%. I understand the promoter entity sold out, so it was a clean out trade, so to speak. So no further supply is expected in Swan, and hence a big move there as well. Then there was Honasa as well as the Shriram Properties. I covered Shriram Properties extensively, and there was a block in Honasa as well. So today is a day when this institutional number will also be marred because of this block deal. So one need to capture that as well. The last one is the third one is IDFC First Bank. As I said, the private banks are well bid, and within that IDFC First Bank stands out. Big volumes from larger FIs. The delivery one is expected to be quite high, and there is a very strong buying interest from some large institutional investors. So that's IDFC First Bank. And the last one is Siemens. The stock may react in the last 30 minutes of trade purely on back of the MSE flow. So there is a small MOC buying from a leading FI desk, and hence Siemens will be in focus as well.
Nimesh, on Adani Group stocks, which you began with, is there any indication that there is, volumes are huge. Any institutional interest here as well? Anything you're hearing or picking up?
I understand, especially for Adani Enterprise, looks like some bit of institutional interest is back, not only from the domestic mutual funds, but from some AIF as well. For the other stocks, I'm not too sure whether there is too much of institutional interest at this point in time. But also remember, Prashant, in terms of Adani Group stocks, at least for the cash stocks, there is still a lot of restrictions from a lot of brokers. So a lot of retail investors also cannot easily buy into Adani Group stocks without margins, and also whatever we've seen, the interest seems to be largely in Adani Enterprise from an institutional point of view. And for the other group stock, it's largely the larger HNIs who can fund on their own, and they have been buying largely into the Adani Group stocks today.
Got it. All right. Thanks a lot for that, Nimesh. Well, in the last few minutes, one stock that's moved to the high point of the day is India Cements. The street is hoping that something's got to give out here. We have a large investor in there, Mr. Radhakrishnan Damani, who has a large stake. The promoter entity as well, both of them put it together, have more than 50% stakes. So the street is hoping that something's got to give out here. But we have seen it in the past, and in the last many quarters, nothing has happened. But hope continues that some kind of a bailout, something will happen, debt will reduce, hopefully they'll stop losing market share. For the time being, that stock has spiked up. Midesh Thakkar is back with us though. Midesh, what's the buy or sell call you have for us with the reverse trade in the next couple of days?
Yeah. So BTST on IDFC Limited. BTST here with a stop at 122.5 and a target of 127 kind of thing. And the other one is a BTST on Siemens with a stop at 38.19 for targets of 38.75.
Okay, Midesh, thank you very much for that. So those are short-term trading ideas. Now, sticking with, of course, the big rally we are seeing in Adani Group stocks, GQG's $4 billion investment in Adani Group companies is now worth $6 billion after what has been a stellar rally in these stocks, especially over the last 2 days. Remember, the group's market cap itself has surged by nearly 3 lakh crores in the last 2 days. Hormuz is standing by with details of this and more. Hormuz, take it away.
Well, it's a stellar rally indeed, and every Adani Group stock that you see is now up anywhere between 7%, 10%. Some are even locked in a 20% circuit. It's been an unbeatable run, and as you can see some flashes on your screen, the market cap now is nearly 14 lakh crores. That is almost 2.5 times, nearly 3 times jump now from the Hindenburg lows of 5.8 lakh crores that we had seen. Now, let's take a look at what happened. Now, in the month of March, which was at the height of this Adani Hindenburg saga, GQG Partners had invested 15,446 crore in 4 Adani Group companies. Now, that was Adani Enterprises, Green, Ports and Energy Solutions. And in these 4 companies, they have subsequently increased their exposure in the month of June and September as well. Now, for those investments, most of these investments have now returned handsomely. Adani Enterprises now is worth nearly 9,000 crores. Green is almost now around 8,000 crores. Adani Ports is now 7,500 crores. And Energy Solutions is also close to 8,000 crores from the investments that they had made. So almost 2x to 2.5x returns on most of the investments that they had made in the month of March. Now, in Adani Power as well. But before that, you see the run that these stocks have seen since the 2nd of March. Adani Enterprises is up nearly 80%. Adani Ports is up nearly 60%. Adani Green has gone up 150% since the 2nd of March. So see, shows the kind of run that these stocks have seen. Now, in the month of August, the promoters of Adani Power had sold around 31 crore shares or nearly 8% stake to GQG in a large block deal. And that was done at a 9,000 crore valuation. And since then, which was the 16th of August, the stock of Adani Power is up nearly 90%. And so GQG is definitely laughing its way to the bank. And now the EM equity fund of GQG Partners as of 31st of October, the AUM is worth $14 billion. YTD returns are 12%, but I'm sure they have gone up by now considering the rally that these stocks have seen. And the India allocation is now 35.5% to this fund. It was 33% the last time we checked. So they have certainly increased their allocation as well. And in the top 10 holdings, Adani Enterprises features as well with around 2.7%. But the other important holdings include ITC, which is the largest at around 7.5%, and ICICI Bank, which is close to 3% as well. So stellar move in Adani, and GQG is a happy camper for sure.
Absolutely, minting money there. Thank you very much for highlighting that interesting data. We will get into a break. On the other side, we'll invite Jay Bala from cashthechaos.com. Stay tuned.
Welcome back. Well, another day, and maybe in fact we're going to be ending yet again at the high point of the day. So things really looking up. Jay Bala from Cash Secures joins us on the show. Hi Jay, I think the last time we spoke you briefly alluded to the fact that maybe we're in for a bit of a breakout, though I'm not sure whether or not you ruled out that we could revisit some lows. How are you trading the index at around 20,850? Are we overdoing it on the upside or lots more to go?
Fair question, Nigel. Thanks for having me on the show. See, I had mentioned in November itself that when the market printed 19,875 on the November 16th, I had said that the markets are set for all-time highs, and except that the pullback wasn't, was very shallow, and the markets. It's not surprising that the markets have clocked record highs. But as things stand now, we are due for a pullback in the short term, but that'll be a bullish pullback, and we are due at least for one more higher high for the markets. So still for traders, it's still buy the dip. But as I've been mentioning for the last couple of weeks, we're still evaluating the possibility that once the pullback is done and makes another all-time high, there is a possibility of that will clock a medium-term top. But we are still, it's on a working thesis. We're still waiting for confirmation. So at the moment, it's still buy the dip for traders.
The unfortunate thing is the dip is very shallow. Even today, at best, we got about a 100-point dip from the top. So that's not too much to work with in terms of an entry point. But what about the Nifty Bank? 47,000 crossed and climbing higher.
Yeah, that's right. The Bank Nifty, the support levels are about 43,000, and we are looking at higher highs closer to 47,800 to 49,800. But even there too, the structure is pretty similar to the Nifty. We have one pullback to work with and one more higher high to work with, and we'll be bumping up against long-term resistance at about 47,800. So watch out for what the markets do around that level. And the private banks are the ones which are pulling the markets up, the banking sector up. So a little further to go for the banking sector. 47,800 is the near resistance for it.
All right, Jay, equity markets are doing well. And that's obviously we have the domestic booster shot that's coming from the state elections. But globally as well, things have worked in our favor. US yields have cooled off dramatically from 5% to 4.2%. You have, the dollar index that has cooled off and crude as well. What's your view? I mean, where are these three asset classes headed?
Yeah, see, the fact that you brought up the global macros is very important. And yesterday's price action, or the last couple of days' price action, has the potential for the global macros to turn. The Euro USD, copper, and precious metals are signaling there's a possibility that that could be a period of risk off. But we need a follow through to come through. So it's critical that we watch the 1.075 level on the euro. And if we were to break through the 1.07 handle, that we might have a period of risk off. And gold, after clocking fresh all-time highs, has reversed really sharply. And so that's also an indication that there's a possibility of dollar strength. But as I've said, there is confirmation that's pending. And I had pointed out in October that Bitcoin would be doing pretty well in the short term, and it's done pretty well compared to the Nifty 7% and the Bank Nifty 6.5%. Bitcoin has gone up 27%. So the relevance here is, I've always said Bitcoin is an indicator of animal spirits. So as long as Bitcoin is doing well, it's good for the bull case. So watch out for it. Even if it's not tradable, it's a good measure of risk on in the markets.
Jay, if you were to extend, I mean, so at new highs and these kind of breakout levels, how does one project higher levels from here? We're at 2,800.
Yeah, at the moment, I'll watch for the pullback, but until that, I will still maintain the possibility that we are still not heading much beyond 21,300, and 21,100 might even put the brakes for the market. And we might see a pullback start as early as tomorrow if we were to see a follow through for the the global macros, the Euro USD cross or copper. Copper, it's got a very significant reversal yesterday, and Euro USD 1.075. If it were to go through, I think we'll have the anticipated pullback to come through. And that pullback, I'm anticipating it to hold to the gap level. There are a couple of gaps here between 20,500 and 20,300 on the Nifty. So that could be the pullback area. Post that, we would likely to have a record high, and we'll watch out and evaluate the medium-term situation after that.
Any thoughts on power names? Power Grid, NTPC are up 4-5%. Year to date, these stocks have rallied 70 and 45% respectively. Looked at the charts?
Yeah, the energy sector is the one that's doing well. In fact, if you recall from our last week's call, it was Tata Power for fresh 52 guys. Still further highs are pending for Tata Power. I'm expecting to touch close to 300 mark, and CESC is still trending strongly higher, but it's a bit late to enter here. I expect the energy sector to reach somewhere close to about 33K for the Nifty Energy Index, and HPCL, BPCL is likely to hold about 334 and 407 respectively.
Well, Jay, it's not really the market to short, but maybe if we're running ahead of ourselves, and the best opportunities could come on the short side, though you'll have to be extremely brave out there. Could you tell us if there are any short ideas?
Absolutely. I have a couple of names here on the short side. It's PVR and Syngene. Syngene, went back to retest the breakdown level of 746 and is turned down for the last couple of days. So, a stop above 764, and it's got a potential to drop somewhere close to 650 or even 620. And the other one is PVR, another relatively weak candidate. Still a correction in the medium term, but the short term offers a downside potential. Stop above 1775 and a steep drop potential somewhere close to 1435. So if this anticipated pullbacks were to come through for the Nifty, these two will be the underperformers there.
Jay, we'll leave the conversation here for now. Thank you very much for joining us on this Tuesday afternoon. The Nifty is going to close at the day's high at levels above 20,850. After a 2% rally on the Nifty and the sensex, today we're adding on close to about 0.8%. The Nifty Bank was up 1,600 points yesterday. Today, it's a gain of 550 points. Even the mid-caps, which were showing signs of faltering about an hour back, the mid-cap index has picked up, not quite to the same extent as the large cap, but the mid-cap index is up nearly 0.5%, and even the small cap index now has a bit of a green going for itself. The advanced decline ratio, though, continues to be in favor of the losing side, so skewed in favor of the declining stocks. Big gainers, Adani Group stocks, Adani Enterprises, Adani Ports, as the total combined market capitalization of the group crosses 14 lakh crore. Power Grid, NTPC are number 3, number 4 in terms of the gainers list. Banks continue to outperform. SBI, ICICI Bank, HDFC Bank in the green, but the gain compared to an ICICI is a little modest. So HDFC Bank is up 0.9%, while ICICI Bank is up 2%. Losers include some IT names like LTIMindtree, HCL Tech, Divi's Lab, and HUL also saw its losses pick up towards the close of trade.
Well, indeed, gold finances actually were under some pressure as well. Today, Muthoot as well as Manappuram, both of them were down 2% apiece. You had India Bulls Housing Finance, plenty of rumors out there that something has got to give, and maybe something could be in the offing for the time being. Nothing yet in sight, but that stock is down close to around 2.5% in trade today. A couple of other notable movers as well. PVR, well, I believe that animal collections are quite good. And even on Monday, for a Monday, actually, relatively the collections were fairly decent. But for today's session, that stock came in for some profit taking. A couple of notable movers on the upside. MCX did well, InfoEdge did well, and otherwise, it was a good-looking screen, even from the broader markets, going home with gains of close to around 0.5% on the mid-cap index. You had few more stocks that declined in comparison to advances, but after the kind of run that you've seen, well, you'll say it's pretty much par for the course.
I mean, what do you say, right, guys, to a market like this? Is you just look at it and marvel and say, well, there's very few things where you can kind of pinpoint and say things are looking, this is the weak link or this is the chink in the armor. From a local perspective, from a global perspective, is just looking too good to be true, but it is true. So I think you just got to give it to what you're seeing and basically just stay invested and not try and do too much of in and out and miss out the upside. Basically.
I think at these levels, you're basically participating for a longer duration. You believe that this is going to be a big roaring bull market for the next 5-8 years odd, and you want to participate in the upside. So keep your SIPs going. You stay invested and buy good quality names. Maybe you'll get a pullback of 2, 3, 5%, but this market is pretty much headed up.
Yeah. Nigel, even if it's not a big roaring bull market, I'm saying even if you get 10, 12%.
That's good enough.
That's good enough. Yeah.
That is not good. That's fantastic.
That's fantastic.
I think
the problem is, from COVID onwards, people have got spoiled. You meet someone on a Saturday evening, you'll say, I expect the market to compound by 13, 14%. They'll say, my portfolio compounded by 25%, but when do you start 2019?
So that the market will teach.
Yeah.
And, eventually the market will teach. But you get big days, and if you're invested, you participate. If you're not, you kind of look on and wish that you are invested. So stay invested. That's essentially, I think, the lesson we can all learn for the future. 170 points higher, absolutely stunning day. 20,856 is where the close is. That's a wrap on this edition of Closing Bell. But don't go anywhere. Nigel and Rima will take you through the next 20-25 minutes. Markets Forward will pick up on the action in just a bit.